This is the Debunking Economics Podcast with Steve Keen and Phil Dobbie.
The Archives.
Episode 27. Is Trump right about an import tariff?
Hello, I'm Phil Dobbie. Welcome to the Debunking Economics Podcast. Professor Steve Keen will join me in just a moment to talk about corporate tax. Is it a fake tax? Donald Trump seems to have it in his sights. He's talked about massively reducing taxes on business, but maybe there's a question as to whether you should tax businesses at all. So let's have a look at corporate tax. Why do we have it, and could it be done better? With Steve Keen. It's in the news now, of course, because of Donald Trump talking about a border tax, which some are saying is nothing more than protectionism. But is it really? And, of course, as we're hearing over the last day or two now, Lord Tebbit is saying Britain, perhaps, should do the same. But you know what? I'm not sure it is the same as protectionism. But first, let's have a look at how companies are taxed. Steve, your views, first of all, as to whether corporate tax is actually an efficient form of taxation as it currently stands.
Well, it's an available form of taxation, and this is the real danger, because the one point I want to get right from the outset is people think if the government doesn't get tax revenue, then they can't spend. And that is, I've got to think of an analogy that makes sense of this. If banks don't get repaid, they can't lend.
Yeah.
Now, that's a fallacy, okay, because banks' capacity to lend is not affected by re-lending what they've got in the way of deposits. It's something which comes out of their capacity to lever up their equity. And yes, okay, if they have more outstanding loans and they've got potentially less capacity to lever up the equity they've got. But it doesn't prevent them having the capacity to lend money in the first place. Same thing applies with tax. The government, if the government has a spending plan that involves spending, say, 3% more than tax revenue, and therefore they've got to issue bonds for it, as soon as they issue the bonds, they start spending the money. Because the Treasury, the central bank, even though those bonds are supposed to be sold to the public to raise the money to finance the government spending, etc., the central bank knows that if they don't sell enough of those bonds in the public, I hate the way public and private get confused in that language, by the way. By the public now we mean the private sector.
It is confusing. It's like public school and private school. Which one did it go to? Exactly.
Yeah. But anyway, we mean to sell it to people who are not government. Now, if there's not sufficient purchases made, then the central bank's role is underwriting and it goes into open market operations and buys them until such time as those bonds are sold. Right. And of course, normally, because people are particularly looking for safe havens these days, as they call them, the government bond, 100% of it is subscribed and sold. Now, if you and I tried to spend by issuing bonds, and then as soon as we've issued the bonds, try to spend the money, not allowed.
Yeah.
Okay. Yeah. Okay. Now, so in that case, the government doesn't need tax revenue to enable its spending to happen. And the best perspective that I've seen put on the role of taxation doesn't come out of groups like the modern monetary theory crowd so much as out of a good mate of mine actually over here in England, George Cooper, who was a physicist and worked as a trader for Goldman Sachs and is now establishing a private equity firm called Equitane, and wrote a book originally called Blood, Money and Revolution, which was a fairly aggressively chosen set of title, had nothing to do with revolution. I mean, the revolving nature of blood inside the circulatory system of a human body. But it sold very well and is putting a physicist's perspective together. And what he argued was happening courtesy of taxation is that it stops money accumulating. And therefore enables the money to continue circulating and maintain economic activity. Now, of course, what's happened with tax is that individuals like you and me can't easily evade the damn thing, even when it shouldn't be levied. I'll talk about that later if you like. But companies can locate their so-called offices in the Cayman Islands, and I have visited the offices of News Limited, General Electric, and about 30 or 40 other companies. It was a one-story building, actually maybe 2 stories.
I'm so surprised it's so large. I just thought it might be a serviced office somewhere.
Well, they needed enough room for all the plaques they had on the base on the ground floor level. I mean, it's a total fiction. And I think News Limited at one stage, 80 or 90% of its profits were declared in the Cayman Island. The building was empty.
Yeah. Right.
Okay. Now, this is the sort of thing companies can do. When they're taxed on the income side.
Exactly.
Yeah.
Well, that is entirely because corporate tax, in theory, is applied where the profit is made. And the question is, where is the profit made? Is it where the factory is? Where you say, no, that's just where we make stuff. Is it where stuff is sold? And you're saying, no, that's just where the stuff is sold. I mean, you've got multiple choices, haven't you? And obviously companies will always say, well, yeah, we're going to go wherever the corporate tax is lowest, given that we've got this spurious definition of wherever the profit is generated.
And that's because accounting can do wonderful things, and so can the way you count costs in turn. I think I've mentioned once before a friend of mine who said that he made a telephone call to inquire about code issues in some software that he was co-developing with somebody, with an American corporation while based in Sydney, and they got a $10,000 bill for the telephone call. Yeah. And that was just a nice way of transferring the money from Australia, where there's a higher corporate tax, to America, where it was lower. So you've got this capacity, because companies span countries, whereas countries do not span countries, except for a little place called America, which has a military base. But it's not what they're talking about, that. And Russia. Yeah. Then that's capacity to operate in numerous jurisdictions and take advantage of the different tax laws between them, means that they have really minimized the extent to which they're relocating that money back to the source of origin. And that's part of why we're seeing declining economic activity. Right. So it comes back to saying, well, how do we make tax part of government policy about maintaining as much economic activity as we can in our own country and globally? Then yes, the answer is the way we're doing it right now lets corporations off the hook and means that the recirculation effect doesn't occur. The gap between government spending and taxation, which I believe should be there, gets bigger than it should be. And then what happens is the tax rates are put up on the middle class and people who can't get away from it. And you start getting people complaining about the government when it's actually the corporations causing it.
Right. Well, there we are. So isn't corporate tax, in fact, really just another form of, because I mean, on the one level, you could just say, well, let's just get rid of corporate tax because we have income tax, and let's just tax, because at the end of the day, it's all just about taxing people. And maybe the argument for corporate tax is, well, it's just a way of ensuring that we're taxing profits that are made by businesses, for which the major beneficiaries are probably fairly rich people. So isn't it really sort of like a proxy for income tax? And if we were happy that income tax worked efficiently, maybe we wouldn't need a corporate tax at all. We just taxed our income earners more.
Yeah, but the same thing applies with income tax.
Easily avoided. Absolutely.
Yeah. When you're wealthy. Yeah. And this is where I think the suggestions that you've noted there have a certain appeal to them, because if you say it's where the taxes are paid by the company, where the profits where the sales are generated. Yeah. And this is partly what's being suggested by Trump. He's not going to tax the goods. The price of the goods going up, but the companies that are doing the re-importing, they've got their information on the trade ledger, and it would be feasible to do it that way, and it simply means it's harder to evade, and in that sense, I think it's a sensible reform.
Yeah. So, but doesn't it then become a bit like GST? I mean, it's, and some people have said, well, Donald Trump's a little bit confused because he's made the comment that, there's goods that are made in America, which are then, for example, sent to Mexico or near neighbors. And then they slam a tax on it in the form of a GST or value added tax, a general sales tax, whatever you call it, a tax on the sale. And he said that's unfair because we don't do that for goods in America. But of course, those countries like the UK where there's a 20% VAT, doesn't matter whether the goods imported or made here, that VAT applies. But of course, that's paid for by the consumer. If you are saying, well, okay, let's have a corporate tax where we tax based on consumption, where it's consumed, it's a bit like a GST or a VAT that's being paid for by the company, isn't it?
Well, in a sense, it's based on sales. Yeah. And then in that sense, yes, it is. But the difference, of course, is not being based on the income of the consumer. It's not taking money out of the income of the consumer. It's taking money out of the income of the transactions generated by the firm and saying, well, we're not. I just like the idea of something that it's very difficult for corporations to evade. They can't declare profits and tell their shareholders what they got in one document while having another one saying we made no transactions at all in this country last year. Gee, well, how did that happen? Yep. So it's much harder to evade. And what you've got to think about when you're dealing with individuals, we're just stuck. And we've got the little taxation agent down the road who normally, to our great loss, is extremely honest about applying the law, even if the law is crazy. But with the levels of accounting advice that the major corporations and rich individuals can pay for, any loophole we can find is there. And if you have to get a second or third citizenship in a little place called, St. Albans or the Cayman Islands and so on, well, we'll manage that, and Yeah. And on it goes. So it's easily available. It's very hard to evade a record of the number of transactions you generate. Particularly, of course, you can have multiple sources of that. You've got the actual everything goes through retailing or wholesaling. So it's just not possible to claim it didn't happen.
Yeah, I'm not sure St. Albans is a tax haven. St. Lucia maybe, but maybe we should make St. Albans. That would help the Hertfordshire economy. That's for sure. So it's not a bad idea. Does it do it? Is it necessary though? Does it do a job? Is it, if we had does it, cause your whole idea about the whole point of taxation is to stop money sort of, aggregate. Well, I guess, it's that idea of, it's almost like you're describing like a heart valve, isn't it? So that the blood keeps on pumping around. That's
fundamentally George's analogy, and I think it's a good one.
Does it achieve that? Would it achieve that?
Yeah, it would achieve that, because for a start, at the moment, we know corporations are evading a substantial part of the tax they should be paying by locating themselves into foreign tax havens and declaring the profits there rather than domestically. So if you actually had the taxation, and what it means, of course, that accumulated and then is passed on to the corporate managers as much as the owners. We know what happens in major corporations these days. But that would mean that it would be circulated back into the general tax revenue. And we said, therefore, the burden imposed on us as middle-class consumers would be smaller, and you'd have more of that money circulating inside the economy in which it was generated. So it would be, the whole idea of it increase the rate of circulation of money.
No. In fact, you could just replace GST, couldn't you? You could just say, well, we don't need a consumption tax where the consumer pays, we just need a consumption tax based on the sales that the corporation pays.
Yeah, and the corporations might complain about the level of that. They're saying you're putting a tax on transactions rather than a tax on income, so it can't be the same high level. And that's true, and you'd have to fine-tune it and so on. But it would be, basically, you'd have it there and say, well, look, if you guys weren't evading tax or income tax, we wouldn't need to think about this, would we?
Yeah. Well, I mean, we have this whole thing about tax competition now, don't we? And in fact, to Theresa May, one of her first reactions when she sounded a bit desperate to me when she was talking about, well, what's Britain's future going to be, once we're out of Europe? She was, saying, well, maybe we could become a low tax center, a tax haven, which is just crazy thinking, isn't it? Because,
for a country the scale of England, yes, and that's what Ireland has largely done.
Yeah.
But you're talking 15 times the population. It's a bit hard to get away with.
But I mean, if you have, you're always going to have that problem where if it's taxed based on where the profit is, then you're always going to have this tax competition around the world. If you have this sort of approach, and you tax heavily, then a company can make its choice. What's that country worth? It's not worth operating in that country because the tax is too high. Or you say, well, it's a big market. There's lots of people there. I need to reach that market. I'm going to have to pay heavily to reach them. But it's still fundamentally going to be worth my while. So we're going to operate there.
Yeah. And I don't think you have countries deciding not to operate in England because of a transaction tax level.
Yeah.
It's just small markets maybe, but in that case it reverses the power.
It absolutely reverses the power completely, and puts more power into the to the country's administration. So can it be done unilaterally? Could Donald Trump do it, and the rest of the world? Well, would the rest of the world then have to follow? I wonder.
I think he could do it, and quite possibly will, because if you impose this tax on the companies that are bringing the goods back in, which is his idea, then you're not actually imposing it on the consumers. You're taking profit out of it. The whole thing is that the relocation of production has been done to boost profit and boost returns to top managers versus workers as well. And if this happens, then it suddenly doesn't boost those profits anymore. So it can be effective in that manner. And then America can do virtually anything unilaterally, because even though they're complaining about trade, et cetera, they're still the world's most self-contained economy. So they can do it at a sort of global experimental level. And once they've done it there, then of course it's quite possible for countries elsewhere to say, well, we'll copy that idea.
Yeah, of which the UK might actually be one of the first, given there's so much turmoil in terms of UK's future currently that maybe the time to do it.
Yeah.
All right, well, an interesting one and it's, Donald Trump does have some good ideas. I mean, the guy's an idiot. He's an egotistical maniac. He miscommunicates profusely, but underneath it all, if you dig down and do himself a bit of a favor, there's some good ideas lying there.
There are some good ideas, but mainly because the conventional ideas are so crazy. When you look at them and think things like free trade and so on, the actual intellectual foundation is rotten. And the one thing advantage of Trump, political correctness has never been part of his vocabulary. So when he comes out and says the mainstream is nonsense, he's quite often going to be right.
Yeah, it's just the way he says it that might lose him points, perhaps. But on this one, well, he could be right on this, couldn't he? A corporate tax that taxes on consumption rather than profit, and potentially a replacement to sales taxes like VAT or GST that the consumer pays. Well, if you're listening to this for the first time, this is one of many podcasts between myself and Professor Steve Keen. Steve, of course, is the author of the book Debunking Economics, and in these podcasts we question some of the fundamentals of economics and try and understand the way things really work. If you'd like to help fund the podcast and Steve's work, then subscribe. This edition is free, but many are available to paying subscribers, and we add one or two more each week. To subscribe, choose a monthly or yearly plan in the right column of the main website. It's not on the mobile app. You have to go to the website at debunkingeconomics.com. We hope you can join us, and thanks for listening to the Debunking Economics podcast. I'm Phil Dobbie. See you soon.